Hello everybody, Jason Veenstra here with the Veenstra Real Estate Team brokered by eXp Realty. And there has been a lot of talk about home affordability over the last year, and honestly, that affordability has gotten really tight. Now, thankfully, over the last few months, we've seen some relief on that front. Mortgage interest rates have actually declined since their peak in October of 2023. But when we're talking about home affordability, it comes down to actually three key factors. One is mortgage interest rates, two is actually home prices, and then three is wages. Let's dive into those a little bit deeper. So mortgage interest rates have come down in the last few months, and most experts expect that they'll continue declining as we get further into 2024. Check out what Jiayi Xu, an economist from Realtor.com, says. While there could be some fluctuations in the path forward, the general expectation is that mortgage rates will continue to trend downward as long as the economy continues to see progress on inflation. And even small changes in mortgage interest rates can make a really big impact on that monthly payment. The second important factor is home prices. Home prices did go up slightly in 2023, but at a more normal pace. And again, most economists and real estate experts are expecting prices to continue rising moderately here in 2024. And the reason for that is simply because even though we're seeing increasing inventory, we still don't have enough inventory for the number of buyers out there. Here what Lisa Sturdivant, the chief economist at Bright MLS, says, more inventory will be generally offset by more buyers in the market. As a result, it is expected that overall, the median home price in the US will grow modestly. Now that's great news for home buyers because we're not expecting home prices to skyrocket like we saw over the last 2 or 3 years. However, we are expecting those prices to go up moderately. So if you're thinking about buying, it might make sense to look at that sooner rather than later. Another positive factor that we have to consider is wages. Check out this graph from the Federal Reserve on what wages have done over the last number of years. If you look at the blue dotted trend line, you can see the rate at which wages typically rise. But on the right side of the graph, wages are above the trend line today, meaning they're going to go up at a higher rate than normal. Higher wages simply means more affordability when it comes to purchasing, simply because you're using a smaller percentage of your income to make that monthly payment. Now, what does all this actually mean for you? Well, if you're thinking about buying here in 2024, let's have a conversation. I'd love to learn more about your and your family's situation to see if it makes sense to buy sooner rather than later, or maybe it makes sense to hold off a little bit. Give me a call at 269-350-5514 or email me at sold@veenstrateam.com and let's sit down and have that conversation. As always, stay safe and have a great day.